Hi, this is Bob Iaccino talking energy futures. Let's talk about crude oil. I'm coming to you from the CME Group trading floor in Chicago, where we saw crude pulling back quite a bit after 5 of 6 days up. We see some profit taking coming in. Today's drop ended up being on the lows around 1.25% at about 64.25 on the low side. Still pretty good price for producers of crude, but the rally sort of that came in toward the end of the day put us at about 64.50 going in toward the end of the day, finishing down right around that 1% mark. One of the things that came out yesterday with the IEA report, which had a surprise draw of crude oil and a surprise draw of gasoline, was the refinery output. Now, it was interesting because yesterday's huge rally almost completely ignored that refinery outputs had now fallen to about 91.2%. Now, what does that mean? Well, 95% is close to full output, and this fall of refinery output could be part of the reason that you saw the draw in gasoline. So, in terms of that output falling, there's two things. The fall in the supply of gasoline is because the refineries were putting out more of them, and also there's been reduced imports from OPEC countries. 14% fewer imports from OPEC countries into U.S. refineries from the month-over-month figures that we saw overnight as well. So all of those things contributing to lower output refineries, it is possible that the ramp up after we get through turnaround as we go into summer driving season could push crude oil prices quite a bit lower as you see some of these gasoline inventories and stockpiles rise. Gasoline also, by the way, is about at the top of the range in terms of their average inventory. So there is plenty of gas, even though we saw a draw yesterday. Crude oil, on the other hand, still 44 million barrels above its 5-year average. And then on top of that, the dollar correlation seems to have broken down. We had a weaker dollar most of today, rallied a little bit in toward the end of the day. And that correlation over the last 3 days, where the dollar stronger means lower crude oil and vice versa, is kind of broken down. Over the last 3 days, you've seen the dollar up 2, down 1, and you've seen crude up 2, down 1, and that's sort of correlated to the dollar as opposed to the inverse correlation that we normally see with crude oil. So we've got Friday rig counts coming tomorrow, but right now this just seems more of a profit-taking sell-off than anything, with a little bit of that factor playing into the refinery outputs figure. This is Bob Iaccino talking crude oil futures from the CME Group trading floor in Chicago.